Hi, this is Dave Aquino with Microquant. This is the Value Charts video of the day for Thursday, August 1st, 2013. What I want to show you today is actually a chart in MasterCard and an example of a news-driven trading event, something that you really can't assume that's going to happen anytime. You just need to be wary of what you can do when it does happen. Now, when we were actually watching MasterCard for a while, and you can see there was this ascending wedge formation over the past month and a half. And what we were watching was earnings before the open of the market on Tuesday. It was positive, so MasterCard actually gapped up to this level up here. We pulled back slightly throughout the day, but mainly stayed in this upper section, the yellow bar segment up here. Now, about 11 o'clock, when there was some news, we started to drift lower, and then we started to accelerate downward. At first, we thought it was going to hit this support level based at 605 and then bounce. It broke through that, so we saw it entered the wedge. We thought that this ascending trend line here would provide some support. Now, once we broke through that support, because it was based on the lows of this bar, this bar, this bar, this bar, and this bar, so it was well-established support. Once it broke through there, we saw a very rapid acceleration to the downside with our tick charts. Now, the one thing about this, we actually had a spread call credit spread with a short strike at 605, long strike at 600. We actually broke through that, was actually at maximum loss already. So what we were actually trying to do was play this as a bounce if it occurred, to make up for some of those losses. Now, what happened, it broke through this ascending trend line, and then it, on a tick chart, you could see multiple yellow and red bars, and we continued to follow that until it got to the point where it would bounce. Now, this level at 569.37 was the next support level that we were watching. Now, when we saw that on the daily chart we hit significantly undervalued, and then on the tick chart we saw a pause and a move back into fair value, that's when we bought a lot of Delta 70 calls in MasterCard, and within a minute or two it immediately snapped back. Now, you can see the range of this trade is all the way up from 625 down to 568. So when it snapped back, we moved very quickly $20 up. So our calls that we purchased down here were very profitable, made up more than our loss in our call credit spreads here. So another way you could have played it was what we call a fair value snapback. When we have a down bar like this, when we pulled back up, and the moment we re-enter the green bar segment here, you could have gone long with Delta 70 calls, and it moved up strongly. And you can see at the end of the day, we actually ended well above the 605 level, well above the previous resistance level or support level right there. So right there, the fair value snapback trade would have netted you out an additional $20. That's a more conservative way to play a news-driven knee-jerk type reaction trade like this. Never miss a Value Charts trade. Go ahead and subscribe to this YouTube channel to see more Trade of the Day videos. Click it now. Again, this is Dave Aquino reminding you to keep your options open and your trades profitable.